Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock with news optimism in China is flowering. Firstly, however, we need to report there was a dairy auction overnight, but seasonally low volumes were offered. There was also a 6-year low in volumes, and prices were little changed. Overall prices rose 0.5% in US dollar terms and 0.2% in New Zealand dollar terms. The key whole milk powder price actually fell 0.7%, but some of the other commodities rose. In the US, industrial production data was weak for March, falling when a rise was expected. In fact, 2 of the past 3 months have recorded declines. It's the first quarterly drop in production in more than 2 years. Weakness is especially noticeable in consumer goods and cars, and mining, which includes the oil patch. In fact, American corrugated box shipment data came in surprisingly weak overnight, and packaging companies are scrambling with sharply lower prices. On top of the big drop in freight system employment in the recent non-farm payrolls report, this is painting up a picture of an economy running out of steam. And across the border, Canadian industrial production is stagnant as well. Wall Street is unchanged today, with earlier gains pared back as the poor data was revealed. Overnight, European markets made solid gains, and yesterday Asian markets rose strongly, with Tokyo up 0.2%, Hong Kong was up 1.1%, and there was bursting enthusiasm in Shanghai, where the equities market was up 2.4% on the day. The view is growing in China that it will win the trade tussle with the US. In China, 65 of the 70 major cities surveyed showed price rises for houses in March, up sharply from 57 of 70 cities in February. This was better than expected and is a rebound that will encourage policymakers. The overall rise in price was just under 11% year-on-year and is being seen as a boost in buyer confidence. In Australia, the craziness of their election campaign is underway. In its shadow, the just-released minutes of the RBA's April meeting showed they think a rate cut could be appropriate if the Aussie jobless rate started to move up, which a few economists are forecasting. But it is just one scenario they discussed. They also see their economy trucking along well with low unemployment levels and inflation rising to their target and growth in the real economy holding firm. Housing risks are the only ones holding them back, and they are watching how the wealth effect plays out on consumption. And ratings agency Moody's has just given New Zealand top marks for its economic situation. They say in an updated review overnight that our policy making is highly effective while policy space is ample. And they say they see ongoing steady real GDP growth. Moody's has New Zealand's sovereign credit rating at AAA stable, the best rating available. The US Treasury 10-year yield has moved higher today, gaining 4 basis points to 2.59%. Gold is down sharply today at $1,275 an ounce. That's a $13 drop. US oil prices are a little firmer today at just on $64 a barrel, while the Brent benchmark is still at $71.50 a barrel. And the Kiwi dollar will start today little changed at 67.6 US cents. On the cross rates, we're down 94.2 Aussie cents, and against the euro, we're unchanged at 59.9 euro cents. That leaves the TWI at 72.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.